It's very early as we're recording this, 6 a.m. in the Caribbean. It is equally, as you're watching this, 5 o'clock in London, midday in New York, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 34, Episode 3, in totality. We're now into the bad BRM numbers for old Formula One fans. Episode 201 starts here. Exciting news on the deal front. CQG have entered into an agreement for their acquisition by Broadridge. That's a remarkably torrid and exciting 2-year period for CQG's management. They completed a buyout at the end of November 2023. Now they're selling to an organization with whom they've had a partnership for even longer. And of course, within the case of Broadridge, they're going to be enjoying the opportunity to have a greater, larger volume of futures and options exchange-traded derivatives execution through the CQG terminal. How things have moved on since, good grief, the 1990s, when I can well remember having an original CQG two-screen terminal in order to manage to see the market profile on screen. In the rest of the exchange world, bonds, a big topic of the week. Hong Kong Exchange has been talking about their yield curve ambitions, in particular the bond market. In the US, very, very exciting. Looks like we've got a competitor really coming by stealth against DTCC's monopoly. ICE bond clear approved, therefore encouraging the possibility that we're going to see further competition against DTCC. And while ICE have got their bond clear approved, also over in India, Ashish Chauhan, the CEO of the National Stock Exchange of India, he's been talking about how bonds are now not just a nice to have, it's a financing necessity. Fabulous news to finish off the opening segment from our good friends at NASDAQ. They're going to be supplying the Eclipse system to the Osaka Stock Exchange. That was a very, very hard-won bidding battle, actually. Rather disappointed losers all round there, but the winner of the day was NASDAQ. And indeed, well, NASDAQ, thanks to this sponsored segment, I've got to say, investor appetite is rising for Asia, but post-trade friction is holding markets back. In the new NASDAQ Value Exchange study, 25% of participants plan to grow exposure, yet 46% face artificial trading limits. The biggest pain point, corporate actions. 60% report high error rates, and 39% of platforms are still legacy. The fix is clear. Harmonize rules, standardize workflows, modernize technology in order to unlock efficiencies in settlement and corporate actions. For exchange leaders ready to scale, download Creating Asia's Post-Trade Operating Model of Tomorrow at bit.ly, 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 APAC-Post-Trade, APAC-POST-TRADE. Well, I'm delighted to say that today we're going to be talking to somebody who's very active in the APAC region. Our guest is Gary Norden. The topic, from sim to reality, profiting from floor skills. A wonderful opportunity to journey back into the halcyon days of the 1990s when the floors had their peak. Former life floor trader Gary Norden has over 35 years experience as a trader across investment banks and his own book, as well as managing hedge fund assets. Gary is the creator of the Norden Method, a unique style of futures day trading, and the author of An End to the Bull and Technical Analysis Exposed. Gary Norden, welcome to the show. Where in the world are you today?
Thank you very much, Patrick. I am in Perth, Western Australia.
And that rather explains, ladies and gentlemen, why this show is coming to you as a recording, simply because the curvature of the Earth means that Gary should be aggressively pushing Zs when we're going live at our usual midday New York Eastern, 5 o'clock London slot. So, Gary, tell me a little bit about yourself, because I gather from that accent, you didn't originally hail from Perth in Western Australia.
No, I'm originally from the wonderful city of London. So born and bred in London, and traded in the city of London for around 15 years for investment banks on the floor. I was an options market maker on the live floor back in the day. I was a senior derivatives trader for a number of investment banks in London. And then I moved to Australia about 20 odd years ago, 20 something years ago now, it flies by. And, you know, continued to trade and also work in the hedge fund space as well, which is where I am now.
As a matter of interest, how do you find it? I mean, moving from London, which is kind of the epicenter of the trading day in so many ways. I mean, timing wise, Asia has done its thing or is doing its thing as London opens. Then the US opens in the afternoon and carries on into the evening, but nonetheless, London crosses over with a lot of it. I always find Australia to be a little bit of a challenge because you wake up in the morning and there's kind of not a great deal happening.
Yeah, it's interesting. I'm finding now, certainly the last few years, I've kind of got more into that stride. But obviously, when I wake up in the morning, I'm up. The US markets are just closing, so I'm getting an idea of what's happened. That early part of Asia trading can be very interesting, though. Like the last few weeks, there's been a number of opportunities here. Then the day gets a bit quiet, which is great for me because I have an early start. I can in the afternoon go to the gym and do other things. And then the evening again, it gets busy again as Europe's moving into the US session. I'm here for the start of the US session. And I think one thing that I've really got to understand is, particularly when the Europeans are coming into their day, I've already been watching markets for several hours. And I think that gives me a really good flavor of what sentiment has been like. And, I found some really good opportunities because, as they're sort of just waking up, trying to work out what's going on, I've already been awake for a number of hours and I'm already into the sentiment of the day. So I actually think that now I'm in a much better position. But I agree with you. When I initially came here, I was kind of like scratching my head trying to get into this new situation.
Yeah, I always find it so. I mean, do not get me wrong, Australia is beautiful. Perth and Western Australia, particularly so, absolutely magnificent place. But it is a bit weird from a sort of financial market standpoint because you kind of get up in the morning and there's relatively little happening around you. I mean, and you're also in what, Perth, pretty much the most remote major city on earth because it's what. Yeah. A greater flight to get to the capital city of Canberra than it is to get to the next nearest capital, which would be Singapore, which is half an hour's less flying time or something. It's quite an incredible juxtaposition. So what took you, I mean, what made you take the truly great leap forward that took you from London to Western Australia?
It was a family move, really. I think that I just thought I'd had it, 15 years in London. I kind of thought I'd got to where I could get to. I had a huge trading book at an investment bank in London, and I just decided to take some time and move to actually moved to a very small town in Western Australia. I think called Dunsborough. I moved there for like 18 years. I think one of the things for me is because I was a floor trader, I was always confident and comfortable that going somewhere else, I could still trade for myself from home. I think a lot of investment bank and hedge fund traders are not so comfortable trading for themselves with their own capital, but I'd done that for so many years that I was always very confident and comfortable that I could come here and find, a way to trade, a market to trade that I could do well with. So really just to take the time to, to spend some time and to, watch the kids grow up and it's quite interesting. I think originally I had plans to move into sort of completely different business. Like a lot of people who leave the city, I'm going to do something else. And I'd actually taken some wine exams. The town that I moved to is near the Margaret River wine region. And I sort of thought of myself as, getting into the vineyard space and whatever. But when I got here, it was very apparent that was a terrible business at the time. Vineyards were closing, left, right and center. So I was like, well, okay, then I'll still trade and I'll continue just to trade then. And so, I stuck at it and I've enjoyed it. And now I'm a lot more heavily involved now. My kids are grown up. I'm back in this, like in the thick of things now. And of course now working remotely and etc. is a lot easier than it was 15, 18 years ago.
Yeah, that's absolutely true. I can remember going to Margaret River and actually I found it the other day having a huge bag full of bits and pieces of gizmos in order to connect you to the dial-up internet, which wasn't exactly giving you a lot of latency that was anyway beneficial in those days. But on the other hand, Dunsborough, great place altogether. For some reason, I suddenly remembered one of my favorite obscure wineries there. I think it was called Xanadu, which was very much smaller than the rest, but produced a fabulous dessert wine, amongst other things. Marvelous place to have lived, Margaret River. I'm surprised you're not total alcoholic by the time you finished there. I think I probably would have difficulty not managing to. There's so many great wines. Top tip, if you're looking for a wine trip, try Margaret River, ladies and gentlemen. Absolutely phenomenal. And the best thing about it is, 80–90% of the wines that are produced there don't even make it pretty much outside of Western Australia, let alone outside of Australia. So you'll drink a lot of things that you just will not be able to drink in the rest of the world, and they are magnificent. Well, having finished that advertisement, impromptu advertisement for the tourist board. So tell me that though. I mean, obviously, let's talk about. I mean, trading. You mentioned the fact that if you trade an institutional book, you may not necessarily be good at trading your own money, although you've managed to successfully do both: trade institutional books, trade your own money, or to trade your own money, trade institutional books, and trade back to trading your own money. It's a very, very interesting psychology that keeps you going as a trader in your own right. And presumably, it's quite difficult when you're doing it more remotely from Western Australia, or do the digital tools help you these days?
Yeah, they do. I think, one of the funny things is that day that we just spoke about how the fact that Asian session to begin with is often reasonably quiet, but that's actually a really good opportunity to be able to sort of sit in a more calm way and watch markets, and watch how they develop during the day as well, and how the sessions change as well. I feel like sometimes if you're in London, it's always busy from the moment you start. It will be busy through the early part of the afternoon when New York comes in as well. And I'm able to sit back a little bit as well, which I actually think really helps me now. And again, you just got to get into these routines, particularly when you trade for yourself. It's really important to get in that kind of sink in that routine where you're in a space where you can make good decisions and you can think clearly as well. So I think, yeah, obviously nowadays it is a lot easier. I think 15, 18 years ago, it was a lot more complicated, a lot harder. And that was a constant struggle. I think that whole time difference and looking for different markets to trade was one of the hardest things about moving out to this part of the world.
So I agree with you completely, and it's very interesting also. I mean, certainly from where, say, you and I have been. I mean, we can remember vastly higher commissions than pretty much anybody can manage to pay these days. You've got all sorts of advantages in terms of the ability to get information. The internet has only improved over time. Order entry has only improved over time, and so on. Yet we still have this remarkable position where the vast majority of retail traders do not do very well.
No, I feel that when markets transition from from floors to screens, I feel there was a real opportunity for retail traders. Unfortunately, I don't think it's not necessarily that they failed to grab it. I think it's the people that came out of the woodwork to sort of try and teach them had not actually been floor traders. So previously, in the days of the floor, I can understand most people don't want to go down on the floor and spend, thousands a month on a seat lease and et cetera, et cetera. I can understand that. They don't want to do that. They want to trade from home. As you said, they were paying sometimes $50, $60, $70 aside to trade from their home, ring up a broker, phone down to the floor. All that whole process was a very, expensive process. So when you're trading for that kind of commissions in that kind of a way, you've got to hold positions for longer. Of course it is. If you're trading from home, you're going to have to hold, for several hours maybe, or even longer. But of course, once markets went screen-based, there was the opportunity for people trading from home to trade in a way like the floor traders did. And that was the missed opportunity. Instead, most retail traders have continued to trade in the way they did before, just with cheaper commissions. But that style is just, you're not going to win at that game, trying to hold positions, particularly when you're trading for yourself. To go back to, it's different when you're trading for an investment bank or a hedge fund sometimes, but when you're trading for yourself, I think one of the things that floor traders learn very early is get in and out as quickly as you can. Our skill set just is, we're very good at trading the very now, what's happening right now. So let's maximize that as much as possible. And, if we're going to take on, which we did as, local traders trading for ourselves, if we're going to take on Goldman and JP Morgan and Morgan Stanley, we have to take them on our game. And our game is a very short-term one. And, we don't have the capital and, we have the knowledge and the skills to do that, to trade in the short term. So I feel that retail traders, they didn't really get that opportunity. Most floor traders at that point in the first few years after the floor either moved to something else or were trading for themselves from home, or from their brokers, initially from their broker office. And I feel that in that time, a whole bunch of people came up and started continuing on that aspect of position trading over the long term. And that's never worked for retail traders. It's not worked in, 50 years, let alone the last 20, and it won't work. It's an unprofitable business. And, I explained, for example, in my book, Technical Analysis Exposed, why most technical analysis traders will lose. And that's the most prevalent way that retail traders trade futures. And it's a losing game every time. So I think, to some degree, now with commissions so much lower, that was the opportunity to start trading a lot more short term, in and out very quickly. That's the skill set. And that's also what a lot of bank and hedge fund traders, don't want to do necessarily. So retail traders, again, I think partly because of the people that have been teaching them and talking to them, who are very good at marketing, have been essentially playing the wrong game.
So fascinating. I mean, let's pick that apart a little bit. You talk about going very, very short term. What sort of length of time, or is it, what sort of number of ticks or points should we be looking at in terms of what is the sort of plays that you're talking about?
I think really we should be in and out in a few seconds if possible. And of course, that's very possible now. I think on the one hand, you do have obviously HFTs that are playing in the microsecond space. That's a different game completely. And then you have people taking longer term positions. And there's that aspect of just in the middle there that I think you can trade. And so you're holding, trades for just a few seconds. And the idea is you can have just a small amount of capital in your account, but you're just trading it so aggressively a lot. You might only be trading 2 or 3 lots, even, or 5 lots of ES, for example, 2 or 3 lots of NASDAQ futures. But you can trade them, dozens of times a day. So you're working a small account. It works much more in your favor that way. And so you're holding for a few seconds. So in the ES, it might be 2 or 3 ticks. In the NQ, it could be between 4 ticks and 10 ticks in a couple of seconds, really, or even less. But the point is, it's good for small account sizes. You can work them hard. You're not running too much risk, because in 2 seconds, what can the market do against you? Not very much. You're picking those opportunities of when there are opportunities. And I think that's really where the space is. As I see it, that's really where the only space is. And for me, it comes down to, if you ask me as a trader, where do I think, NQ could be in a year's time? It could be anywhere, right? Where's it going to be in a month's time? Well, I could narrow it down a little bit. Where's it going to be in 1 hour's time? Yeah, okay, I can get within a reasonable bit. Where's it going to be in 2 seconds? I'll be very good at telling you where it could be in 2 seconds. So my understanding of the risk of my trader every time is a lot stronger as well. So I just feel that style that's how floor traders worked. And what I call it, like, in the now, just trade the now. I feel that the quant traders, they're back tested. They have a certain type of trading that works for them. They have the EV over time. If they do a certain thing a lot of time, but their weakness is right now. That's their weakness. And using the order book and the liquidity of the order book to get in and out. That's our strength. That was always the floor trader strength. And I still feel like there's a lot of edge, and there's a lot in trading in that kind of style for people trading for themselves.
Yeah, so fascinating. Okay, I get it. I mean, you're going to move in very quickly. You're going to hold something very short term, etc. What about the risk side of the equation then? First of all, how do you ascertain when it's gone wrong? I mean, is it literally, it hasn't worked in a few seconds, so get out of it? And or is there a physical, tick stop base or something?
So both, and some of that will come down to how disciplined you feel as a trader. So some traders will always put a tick stop limit, maybe 4 or 5 ticks. So that should be the majority of it. For me, like when I teach traders, I actually give them a checklist of when the trade is filled. I think that's one of the most powerful things, is that we can actually know when our trade is filled, the entry is filled straight away without a good fill or not a good fill. So even before the market's moved, as soon as we're filled, there's like a checklist. And as you know, and it's just a sort of market making style, as soon as you're filled, if you're going to hold a trade for just a couple of seconds, whether it's going to be good or bad. And if the fill isn't good, then basically you just get out straight away. You don't even have to wait for the market to go against you. You're not sitting there waiting. I'm very much in favor of being proactive. So basically, and again, from a risk perspective, if you're only holding trades for a couple of seconds, you're not going to be, in most situations, going to be looking at a 20, 30, 50 tick loss in that time frame. But, I really do try to trade for myself. When I trade for myself and teach people, is to understand as soon as possible when it's just not a good fill on the entry, and then you just exit straight away.
Fascinating altogether, and I apologize, you may be getting a little bit of telephony in the background because somebody's trying to ring me on the one telephone I have not managed to knock off, and I thought at 6:30 in the morning I'd be okay to record this show. We're talking to the fabulous Gary Norden in Western Australia. We're discussing from sim to reality, profiting from floor skills. So floor skills, I'm interested in one thing, Gary. I understand what you're saying. You end up with a gut feeling of, it took a long time to fill that. Oh, probably it's not going to go my way, then it's going to go the other way. I can see how that evolves in your mind. But one thing I noticed from floor traders leaving the floor and going electronic was there are some skills you kind of have to leave behind. I mean, there are guys who really, really lived on noise and flow, and watching Freddie over there was coming in with a big sell order, and he could obviously see that. And we saw some spectacular blow-ups, let's face it, of people who'd previously been demigods of floor trading. I don't mean to disabuse you, but they were certainly a hell of a lot better than I was ever on the floor, by a factor of thousands. How do you know, there are some things you lose from the floor skills mentality, but there are obviously other things you keep. What's the balance between those?
So, and there are still many really good floor traders, ex-floor traders, who are still operating today. Most of the people in sort of my sort of community that I talk to if I need help or, you know, discuss things will be old floor traders. I still think they're the best traders that I know. I think the key thing is that when they moved from the floor to the screens was just the way that the information was presented was different. So they saw the markets different visually. And I actually feel one of the things that helped me was I'm kind of like the first generation of computer game people. So for me, looking at things visually and using a joystick or a mouse or whatever to trade was just a kind of moving on from that. But there were people that were older than me, maybe 5-10 years older. They were probably some of the people you're talking about who were very good floor traders, but that visual environment just did not suit them. They didn't see things well. And I was at that time when the floor first closed down, I was in my broker's office. There were dozens of ex-floor traders in there. So I could see firsthand that some were struggling. And it was really about visualization. Also remember, particularly for those that are new here to trading, the original platforms that existed in 1999, 2000 looked nothing like the DOMs we have now. And the DOMs, for example, which is what we trade on now, the reason why they are like they are is because traders like myself and others, I've consulted to software firms over the decades on building these DOMs and improving them, was because the original platforms just were nothing like that. There were some, you know, some platforms. And again, when you move from the floor to the screen, this was a decision that a lot of people didn't think much about. So they had a mate who had just set up a company who was, you know, with a futures trading platform. Oh, I'll go with him. I was quite fortunate actually that my son was born actually in that change over time. So I took a month or two off when he was born. When I came back, some of those guys had already struggled, and my mentors and my group of peers that I work with, you know, came and said to me, "You have to trade with this platform." Now it was way more expensive than all of the others, but it was also much better. And that decision as well was one of the problems that was a problem for traders. And then over the next few years, I worked with platform developers to try and improve it so that the DOM became more like what we would see in a pit, just in a visual way. But that took time. So I think that was the real struggle. The skill set of being able to get in and out of liquidity, in and out of the order flow, that has always been there. But the original platforms just didn't show it in a way that was really intuitive or made it easy to do. In fact, some of them made it very difficult. So those traders had to trade in a different way. Ironically, many of them ended up with like TA, technical analysis screens in front of them, trying to trade off levels, which was exactly the people they were picking off on the floor. But because they didn't have the DOM as we see it now, they just had literally an order entry. Do you want to buy or sell? They couldn't see the market as we can see it now. So when people today judge those traders, you know, don't judge it from the perspective of the DOMs we have now, which show the liquidity and the way the market order flow is working really well. They didn't exist 23 years ago, 24 years ago.
Yeah, no, it's a very good point. I mean, I can remember working with people, gosh, 30 years ago when we were trying to take institutional desks electronic. I mean, just under 25 to 30 years ago. And it was actually quite entertaining because frustrating as well, because every week I'd teach this class, and every week the management would decide to fire a couple of people who were the traders, and they kept keeping the kids because the kids could use computers. And I kept, literally I was tearing my hair out because I was explaining to the management, no, we actually don't need the kids because they don't understand how markets work. They're really good with computers, but these guys, they really understand it. We've just got to be able to translate their skills into, and you're absolutely right, the interfaces at that point in time were incredibly simplistic, if anything, quite confusing in places. And well, I mean, even to this day, I think some of the broker platforms are quite amazing. I mean, trying to set up interactive brokers, I think you need a PhD to manage to work out all the information that's in there.
Absolutely, absolutely. But there are some amazing DOMs now that are absolutely made for order flow traders. And I still consult to a DOM platform provider now. We're still working on new features even today, and we've added dozens over the years. But there's always new things that we can add, new ways to see markets, and that's something that I really enjoy, is just to keep developing that platform to make it better and better for order flow traders. But yeah, the early ones were very difficult, and you just could not see the market in a way that an order flow trader would want to trade.
Right. And so if it's not asking too much, can you give us an idea of a few of the better DOMs that are around? And I mean, are they particularly expensive compared to other interfaces?
So the one that I'll mention, the one that I consult to and help to develop at the moment is Bookmap. Bookmap, global pro DOM, I think, is a really good DOM. It was the original DOM was developed by traders. I've just given input over the last 3 or 4 years in developing some new features. I think it works, exceptionally well right now. I think historically, TT has been, one of the number 1 or 2. I kind of feel Bookmap is at least alongside that. You mentioned in your early part of this show, CQG tying up as well, and CQG has always been a decent product as well. So those are 3, and the cost can be anything depending on your broker, but sometimes there's a one-off fee, I think, for around that $900 sort of thing. And I always say to traders that your platform is your number 1 tool, so don't just look for the cheapest, right? It's and I saw that when I was in my broker office. I had a DOM that back in 2000 was costing me £1,000 a month. Others were using platforms that were 200, 300 a month, but I got trades they didn't get, and I could actually see at times I was picking them off, which a lot of order flow trading is picking off slower traders with slower platforms, picking off traders who are using confirmations every time they trade, so they're that little bit slower than you are. So absolutely, if you're going to go into order flow trading and day trading in that style, the best you can. That was a lesson I learned very early. Take the best one you can.
No, I think that's a very, very good lesson to take away, because a lot of people spend a huge amount of money, put the capital together, and then skimp on the software. And let's face it, it's not as if the software is wildly expensive these days. Because you think about it, I mean, actually, what sits on your desk is cheaper today for about 50 times the amount of order flow in actual hard money terms. I mean, not even in real money, as was something like a CQG 20, 25 years ago. And I don't in no way to deprecate CQG, because I agree with you. I think they've actually been an amazing platform, because they have truly developed over the years and really responded. But it was an expensive business for them to write software to and to provide terminals for, etc. But the actual cost seems to me to be remarkably frictional in the modern age, particularly when you're hard pushed to pay a couple of dollars for any commission from almost anything.
Absolutely, yeah. And if you think, we used to pay, I think at the height when options were really, popular on the live floor, I think my seat lease was around £3,000 a month to lease a seat. So, even when I was paying £1,000 a month for a DOM, or it wasn't even a DOM back then, it was just a platform, that was still quite cheap. That was still cheaper than being on the floor. So again, you'll never see a carpenter using cheap tools. You'll always go for the best you can. And these tools now are ultimately, for the business we're in, they're very cheap.
No, I agree completely. And it is interesting how many people just try to avoid those access tools, because it really doesn't make a great deal of sense. It's quite bizarre altogether. So, I mean, look, one thing, though, that we haven't touched upon yet is this whole issue of looking at why retail traders are failing and why actually they're ending up on the wrong platform entirely. And I don't just mean software. And I'm going to come back to that in just a moment, because first of all, I'd like to introduce our short video of today. We're here talking to Gary Norden, discussing how to profit from floor trading and ultimately moving away from the sims we're going to be talking about in just a moment. When we look at, well, what's been happening in big world, so many things happening, such a busy year already, and we're barely at the, well, later part of February. My goodness, the regime cycle is turning, ladies and gentlemen, and that's the topic of this short 1-minute video in big world. Meanwhile, in big world, 2025 could yet be an epic year of regime change. The Venezuelan dictator Maduro is now in US custody. His government is still nominally the Chavista Socialists, but it looks as if, to some degree or another, the puppet masters are in Washington, D.C. And meanwhile, Iran is hugely exposed. The big shift has been the move from a nihilistic replacement of the Islamic regime to chants amongst protesters to bring back the Shah. Crown Prince Reza Pahlavi, son of the late deposed monarch, coalescing around a single figure is likely to help accelerate the movement, particularly as Iranian regional military standing was eviscerated last year by, amongst others, the Israelis, and of course also with American support. The prospect of a new Iranian regime, which may view women as more than mere chattels, is surely something to welcome, particularly given the relative liberalism of Iran in terms of gender equality even half a century ago, before the Shah's regime fell. For more in Big World, like or follow. And thank you to AJ for another magnificent video she produced for that number. Who knows where we're going to be with the Iranian regime by the time we even watch this video, ladies and gentlemen, in a few days after it's recorded. Apparently there's 100 large fighter tanker refueling aircraft, in other words, essentially airliners that you fill full of kerosene to do mid-air refueling, just hovering around the Middle East at the moment, apropos of nothing at all, painted with United States Air Force stickers along the side. Looks like there could be an interesting denouement coming. Who knows? Hopefully it doesn't resolve in violence. Speaking of markets, here today with an absolutely fantastic show discussing from sim to reality. We're looking at profiting from floor skills with a very, very established and successful trader, both on the floor and on screens, Gary Norden, who's coming to us from Western Australia, hence the reason we're recording this show today. So Gary, talk to me. I mean, one of the things that I think, well, I didn't foresee, certainly, but one of the things that's quite incredible is that when we moved from floor to screen, it seemed, oh, easy, everybody's going to trade on electronic exchanges. But actually, retail seems to have been sort of siphoned off into not terribly wondrous venues in many senses.
Yeah, absolutely. And I think this comes down to an education process. So it's something, in my books, I've tried to sort of explain, but I think originally, retail traders get led onto certain FX CFD type platforms where essentially a lot of the time they're trading against the company they're trading with, and then nowadays we've moved into this live sim environment, which is again becoming hugely popular amongst retail traders. And I really think there's a lack of understanding of what's really happening here. So all along the way, I think one of the things is that retail traders tend to go in wherever the biggest advertising spend is at that moment. And I think they just need to step back a little bit and understand that, often what these firms are trying to sell them is not good for them. And it's something that I termed a number of years ago, the sort of financial junk food industry. And that was after a question from my son when he was, maybe 7 or 8. And he asked me a question. He said, why do fast food restaurants make food that's bad for you? And I said, well, because that's what people want. And I thought about that in the trading environment. So I understand people's desire to trade, but we have to understand it's a very difficult business and most people will fail. But there are a number of reasons for that failure. We spoke earlier about the way they trade, but also the platforms they trade. Is the platform helping you? So, I'm a passionate supporter of futures. One of the reasons why I'm still here is because I've traded in transparent, fair futures and options market, options on futures. They're the most transparent and fairest market you can trade. You trade against other traders. You're not trading against your broker or the person that's giving you a platform. You can choose the platform you want, the best one you can. You don't have to use the one that your, broker's giving you. So you can choose your tools. You trade directly against other people. That's the fairest game in what is a very difficult, I'm not going to make it sound it's easy. It's not. It's a difficult business, but that's the fairest game out there. retail traders are getting led into games which are just not a fair game. They're just not going to win those games. So I think this is, something that I'm passionate about, because I love futures markets, but futures, continually are leaking traders to other environments. And now it's that live sim environment, which I think is a very dangerous environment for retail traders.
Yeah, it's very toxic, and we've also seen, obviously, over time, although regulators in certain places have cracked down somewhat on it, the horrible issues that we've had around about CFDs and things like that. I mean, an interesting tool that can be usable, but ultimately we're just being used as effectively broker dopamine, and a way for the brokers to make a huge amount more profit, because futures became essentially too cheap over time, which is such a shame.
Yeah, absolutely. And like you said, some of these products have a place more for, I think, trying to hold positions. But if you're trying to get in and out quickly, you can't use those. And this, again, just understand who you're trading against. These things are so important. Who makes the spread? How's that spread made? All of these things will affect you at some point in your career. We've seen over in the past that, CFDs have traded at prices that not necessarily the underlying was trading at. And as I say, I feel that, I understand if you're new to the business, you're going to, you're not going to know these things, that who makes the price is important, how that price is made, how is the trade executed, how is the trade, delivered. All of those things are important. And I think one of the sad things is that experienced traders, we're not generally very aggressive out there in putting our view across, and the people that are generally the people that are selling things that are probably not good for people, particularly if you're a day trader, but they appeal. And we have to look through that. Oh, that looks appealing. To why does it look appealing?
Yeah, and I think the fast food analogy that you draw is a really, really good one, because that is exactly what, in essence, is happening with many brokers. It always amazed me, because I've had dealings with some of these brokers, and I always said, well, how do we manage to lengthen the amount of time that people can trade, and therefore make them better traders, and they'll be recurring business? And some of the brokers have just looked at me absolutely askance, as if this is the most idiotic decision they've ever heard. And that is not, to me, a sign of a sensibly coherent ecosystem. And I think, to go back to what you said, one of the things about the floor was, while it was a self-preservation society, there was no doubt there was an incredible amount of camaraderie amongst all the people there, and they would give you a lot of healthy hints and tips. I always say it's like learning to ride a motorcycle. They'd sort of pull you aside after you did something and roll up their sleeve and show you this huge gash on their arm, go, don't do that. That's what happens when you do that. It's not a good idea. It was really, really a healthy position, which in some ways we've lost, I think.
Absolutely. And if you think about it, like the people that were brought on in to become floor traders were often just guys off the street. I mean, they weren't necessarily, many of them hadn't been to school. So they just think about pro traders and retail traders, but most floor traders were just retail traders with good mentors. And they had people that were teaching them well and teaching them good skills. And I think the other thing that you just touched on is that our brokers, the relationship between a futures trader and their broker was a very good one and a tight one. And they wanted to keep us, and if you were good, you would get discounts. It's something that I do for people in my program. Is I've had a long-standing relationship with a broker. We negotiate lower commissions and fees for my people. Whereas if you're trading against your broker on a platform where you're trading against your broker, that's a completely different environment. My broker wants me to do well. My broker wants me to mentor lots of good traders. My broker wants me, I'm funding traders, for them to do well as well. He has skin in that game. He has skin in my game to want me to do well and to do what he can. Whereas when you're trading on a platform where you're trading against a broker, he wants you to lose. It's more of a bookmaker client relationship, isn't it? He wants you to trade as much as you can and lose whatever you can afford to lose.
And the thing that's incredible about it as well is they're willing to fund you, which is essentially lending them your money in order for you to pay it back at a higher rate when you lose.
Yeah. I mean, it's in the live sim environment, that's so popular now. You're being funded by all the losers, and it's an environment that is based on the need that most people will lose. So if suddenly people started to win, too many people started to win in the live sim environment, then the firm that is funding you, so to speak, in that live sim environment will have to change the rules, because they don't want too many winners. Now, that is a perverse and, quite frankly, obscene situation. That's not a trading room. That's not prop trading. That is just the gamification of trading has been taken to the ultimate level, but they need, a huge percentage of people to fail. That style of trading is designed for people to fail.
Yeah. Yeah, and it's but it's a gamification where you can never level up, essentially, and that's absolutely horrific.
Absolutely. Yeah, absolutely. And you won't learn properly. They're not there to try and help you. They're actually there to try and kick you out after a month. So again, with my broker, I have a bad month. We might have a discussion, about, okay, well, we can change margins here or this and that. And we'll make some discussions because he wants to keep me in the business, right? If that's where it gets to. But these firms, they need to kick you out once you've passed evaluation. They want to kick you out as quickly as they can because there's a fee for you to buy back in. And it's all they want. They just want you to keep buying again. And I know it feels like, oh, it's only $20 a month. It's only $30 a month. It's that classic trap, right? And then, of course, you get the sunk cost. I know people, once you've spent a few hundred or a few thousand over a few months and you've just nearly quite got there, because the game is that you nearly get there, or you just get there and then you fail after 1 month, you draw down slightly, they kick you out. So that's that game. And so it keeps you in. It just keeps you in for that little bit longer. That's not what we want. It's not healthy. Trading is a difficult enough business anyway. But what I want is an environment where I can grow, where I can learn from my mistakes, and where the people around me, my broker and etc., my platform provider, they all want me to do well.
Yeah.
Our goals are aligned, whereas in that business, the goals are not aligned. Therefore, the chances of you establishing a multi-month, even let alone a multi-year trading career in that environment, not going to happen.
Yeah, not going to happen whatsoever. I know it's such a drag altogether. It really, really is. So, I mean, looking at this and looking where you are, though, Gary. I mean, one thing that strikes me is you're talking about you have to trade very fast in and out, in and out. Do you have to spend the whole day looking at the market, or do you spend different hours given different days, or is it a question of, the more hours you put in, the more you're going to actually manage to profit?
Yeah, absolutely. I think for traders, it will depend on what time of day, and of course, what time of day will depend on what market you trade. So certain markets are obviously more liquid at certain times, and they're different in the out of hours than they are in hours. But I think it's a very intensive, very highly, requires a lot of high focus to trade in this style. So particularly initially, a lot of traders might struggle to do more than an hour or two at a time. I think those of us that have traded on the floor or banks, we're used to trading at a high intensity level for a long time. But I've always said, like, trading as in a professional style, it's a bit like playing golf in a professional way, right? The focus of a professional golfer, they're looking at every little detail. That focus is quite intense. Many of us can play golf socially, but we can't get to that level of focus of a professional. We might be happy enough to hit a fairway if we want to, whereas they're looking at a particular part of the fairway to give them the best line into the green, where they're already thinking about which way it slopes. For the rest of us, I can't get near that, right? That's too much for me. So if I try to play golf at that intensity, I'd probably struggle for more than 3 or 4 holes. So really, it's about the trader. What's your stamina like in that way? But as I say, I feel that for the account size of retail traders, for the risk that they can carry, I feel it's always been the way. If you go back to the floor, that's how people traded. That's how they survived. And there was always a lot of discussion about how do these guys with just no background in trading, just go onto the floor with good mentors, good people teaching them. How did they do it? And ultimately, many of us, myself included, were picked up by investment banks who were sitting there going, "Well, we've put grads through this scheme, but how come you in the options pit can pick them off?" How does that happen? I mean, we had, this is a true story in our group of locals. We picked up a kid, 16 years old, finished school at 16 from London, typical South London kind of kid, was our runner, or Americans will call them clerks. And whilst he was our runner, we would teach him, particularly the guy that was sort of leading our group, a fantastic options trader, was mentoring this kid. Now, he left school at 16, no maths behind him, or anything like that, but mentored by a very good options trader. When he was 18, after a couple of years of running for us, he went into a pit. Back in 1998, in one day, he once made £400,000. We're talking about a kid with, no mathematical background. And the people, realistically, the people he picked off on that day, the people who lost against him were bank traders. probably, multi-degree, even PhD bank traders that were on the wrong side of what he was on the right side of. And I've always said trading is not about intelligence. If you have good skills, good mentors, you can learn certain skills that will guide you through.
That is, I think, a very, very apt point at which there are so many things we could talk about, but I believe we've reached a very apposite moment at which I'm going to ask you that question we ask everybody, Gary Norden. It's been a joy chatting to you today about from sim trading to profiting from floor skills. So, Gary Norden, where do you think the capital market revolution goes next?
Yeah, I think obviously we're going to go down a very tech-oriented avenue here, right? And AI is going to play a prominent part for many traders are going to use the LLMs and AI to develop trading systems to, back test and etc. But I will put out a warning out here on that. And that is you have to have some grounding, basic knowledge and an understanding of what should be coming out at the other end. I think we've all used some of these LLMs where we've put in a question. I've done it with options, for example, and the answer that came back is wrong. And I've been working, for example, with teams of quants recently, and for the crypto hedge fund that I work for. And we were testing some stuff, or the quants were testing some stuff, and their testing and coding skills fantastic. Their use of technology amazing. But there were some strategies we were testing, and they were coming back, and I immediately said the answers are wrong. And the quants were like, well, it looks like the answer, that it's giving. I said, the answer's wrong. There's something wrong either in your coding. It turned out in one of the situations, it was a coding issue. In another one, it was a data issue. But the question is, can you recognize there's a mistake in there? So I feel that while we're all going to use this technology, you still need basic skills. You still need that knowledge to understand when you may be being fed back something that's incorrect.
I think that's a very, very apposite moment at which to conclude this show. Gary Norden, it's been an absolute joy to chat to you from Western Australia. I hope you'll come back, actually. We can talk a little bit more about trading. I'd love to hear more about your options trading in particular and how that works for you on screen. So that would be really, really terrific. For now, do check out Gary's books. Also, if you're interested, you can contact Gary to get in touch if you'd like to join his programs. If you're interested in learning to be a better trader from someone who's got copious amounts of trading experience from the world of floor trading and the world of screen trading. It only remains for me to say thank you very, very much to not just our guest, Gary Norden, today, but also our fabulous production team. Thank you, Racy. Thank you, Natalie. Thank you, Janella. And our next guest coming up in IPO-VID number 202. It's going to be all about tech money, a guide to the new game of investing. And we've got the fabulously interesting author and raconteur, Igor Pajic, is going to be joining us for that show. Don't forget to miss that. That'll be coming up next Tuesday. For now, I just want to say thank you once again for watching wherever you are in the world today. And to our guest, Gary Norden in Western Australia, this has been a marvelous IPO-VID number 201. And I wish you all a great week in life and markets.